The tax implications of withdrawing savings using the two-pot retirement system have come into sharp focus ahead of the implementation of the Act next month. That's as scores of South Africans are mulling over how to approach the dispensation that will come into effect in September. The South African Revenue Service has sought to highlight that individuals who intend on making use of the system need to be registered for tax. SARS has pointed out that the request for a tax directive sent from a pension fund will also be rejected if an individual is not registered. While contributions to retirement funds are not taxed, tax will be deducted from any amount withdrawn using the calculation of the tax rate applicable to the individual. SARS Commissioner Kieswetter speaks to us about all this. Thank you so much for your time, Commissioner. Let's first unpack the process of those seeking to withdraw using the two-pot system but are not registered with SARS as yet.
Good afternoon, Tumisang. So thank you for the opportunity. I think the two important issues, and you've mentioned the one, is that ahead of applying for a directive, an individual must check two things. Firstly, they are registered for tax, and secondly, their tax status is up to date, meaning that they have no outstanding returns and whether or not they have debt. If one of the two conditions are not complied with, a directive will not be issued. And so we are asking taxpayers between now and the end of this month not to wait until the 1st of September, but to use one of our online channels, whether it is the WhatsApp line or the SMS or the USD or our Mobi app or online e-filing system to check whether they are registered. It's relatively easy. We discourage taxpayers to come to our offices because all of this can be done from the comfort of their homes without having to come and stand in our queues, which are already quite busy because of filing season. So that's an important first step, and thank you for pointing that out.
What I would also like to pick up on, Commissioner, is the issue around one's tax standing where debt is concerned. How do we navigate around that? Because the understanding is that if you do owe SARS, this will also be deducted once you do cash in with regards to the two-pot system.
So there's a number of issues around the tax. The first is that to just be mindful that when your employer deducted your contribution towards the pension fund, or when you bought a retirement annuity privately, that money was not taxed, because the idea is that once you withdraw that money in the future as income, then that income from your pension retirement fund will be taxed. And so now it's exactly what you're doing, except you are not doing it after retirement in terms of the new provision in law that makes available 1/3 of that for savings. You are withdrawing from that, which means you are accelerating the withdrawal of additional income. That income is subject to tax, and what will happen is that income that you withdraw will be added to the overall income for the year. That will determine your rate. Now, SARS will, upon receiving a request for a directive from the pension fund administrator, SARS will inform the administrator how much tax to withhold. And so taxpayers shouldn't be surprised that the money they apply for will be paid out to them less the tax that will be due. Just an important point on that, the final reconciliation will be done next year when filing season again kicks in, and the difference, whether it is over or under, will then be, as we normally do at the end of the tax year, will be squared. The second important issue around tax is that if you owe SARS any debt that you have not paid, and you do not have a repayment agreement in place, then that debt will also be deducted. And so be mindful that the amount you must apply for, and particularly for those who have an important reason for the money, maybe school fees, or some important need in the family, hopefully not for holidays and for luxury goods.
Yeah.
But if it is money that is really needed, to build into your calculation what potentially will be deducted for tax and potentially debt you owe, and you have to almost add that so that the amount you receive will be equal to the amount that you need.
Commissioner, is there room for non-compliance? And if so, how is SARS preparing for such? It does sound like a simple matter, watertight in terms of the information and data that SARS would be getting, because the paperwork is with financial service providers that are registered.
So taxpayers should assume that if they have any debt and they have not made an arrangement with SARS, that debt will be deducted. There is no discretion. What we obviously, in terms of not withholding the directive, when the first two conditions are met, namely when the taxpayer is registered and all outstanding returns are in, SARS may, under certain circumstances, issue the directive and then allow the taxpayer, if we have not contacted you in the last 12 months, may allow you to settle any outstanding issue within a 60-day period from the date of the directive. But if we have contacted you, and we contact most taxpayers in the last 12 months, there will be no let off. You will pay the debt. Unless you have, before you apply for the directive, agreed with SARS formally that you will pay that debt off over a 3 or a 4 month period, as may be agreed between you and SARS.
Lastly, Commissioner, you mentioned earlier that already you are seeing an influx of South Africans coming in to inquire and ensure that their tax affairs are in order before the 1st of September. Preparedness with regards to that number spiking?
Well, I think that there are many South Africans, and thankfully, many of our taxpayers are fairly adept with using our online channels. We have the normal phone, the USSD phone. There is a number that they can call, *134 *7277 #, and that will allow you to get a statement of account. It will allow you to get your tax registration number. It will allow you to get information on your tax status from SARS, or the online filing system, or the WhatsApp number if you have a phone that can WhatsApp, or the Mobi app if you have a smartphone. And so really we would like to encourage taxpayers to do that before they come to our offices. Where they absolutely have to come to the offices, they can also use one of these online channels and make an appointment using the booking system. In the absolute instance where taxpayers will come to our offices, taxpayers must be prepared that our queues will be long, and it may mean long hours of waiting before you will be helped, which is why we're really trying to provide the online services to avoid the long and often undignified queue time, also the loss of production time for people very often who can least afford to lose time from work.
Thank you, as always, for your time. That's SARS Commissioner Kieswetter there talking to us about the tax implications of withdrawing from the two-pot system.